Hello everyone, this is Juan Sarmiento and today is Friday, October the 21st. Last week I had a big issue. I was trying to get my driver's license here in Spain, and so that took a lot of my time. So I wasn't able to record my session, but that shouldn't matter too much in this system. So I'm going to go and check out our current positions and see what I can do about correcting them. Okay, let's start with Apple here. Let's organize them alphabetically, of course, and then go to Analyze tab and see what we have. Okay, so here we have an assignment. So now we have 300 shares. Well, this might be too much, but what would happen is your broker will call you and let you know, hey, you're missing out on this. So then what you do is you either exercise your long puts because they came from these 300 shares from your short puts. Okay, so in this case, what I would do is see if I can do this covered put order. Let me just show you. I select the shares and the put, the long-term long puts, like that, okay? Or you can choose the 40 if that's better. Let's see what it's better, all right? So I select all of it and then I say Analyze Closing Covered Puts, and I say covered here, 3 covered Apple puts, 165, okay, that could be one option. And you can see it's 165.40, 49, 50, okay? So that means 50 cents are the excess that I will collect. If I were to exercise those puts, I would miss out on those puts, on those 50 cents. So it's better to do them like this, all right? Or you can sell along with the puts here, the 140 puts, and depending on which gives you more credit. And that will give you a whole lot more. $9? Well, it depends on where you are. Let's see, 144, and I'm selling the 40, so I'm $5. Well, turns out that these 40 puts are worthless right now. Okay, so they wouldn't. We want essentially to sell the puts that have some value on it. This is only extrinsic value, and so it doesn't make sense. You may as well sell them if you want to, but not along with the regular shares. So let's say I'm going to close this way. Okay, I'm going to close this way. That is, I'm going to sell the 300 shares and I'm selling the 3 puts here. Okay, so that's a way of closing it. And wait until that gets closed. The 165 calls is out of the money. 165 calls that expire in November. Well, perhaps is it possible that Apple will go to 165 before November 18th? Unlikely, but right now you can close that position with 6 cents and leave the 2 puts. Okay, so these puts are quite valuable. So I'm going to close those 2 positions. I don't see any point in keeping them any longer. Yeah, so confirm and send, and confirm and send. And there it is. The puts got filled right away. So we have this 165 calls. Well, we're not going to get there. We're going to get some money out of it, I suppose, but not much. Let's move on to C. Okay, Apple we are out of right now. Now we have the C calls. Let's see, take a look at the chart. Yeah, that has been doing well. Okay, so we have 1100 shares. Well, we have the puts here. Okay, so we're going to do this sort of the same thing. Okay, first close the long puts along with the shares right there. Okay, and you see this says 49.50, and that is the nominal value of those options. So in this case, you can just, it would be simpler to simply exercise the October 21 puts, which are expiring today anyway. Okay, so if you don't do anything, it will be taken away because they expire today, and the 50 calls are out of the money. Let's see, 50 puts, they're in the money. The 40 puts are out of the money. So these two are due to expire today, but these 11 puts will be exercised along with the shares, and the shares will be taken away, and that's essentially the entire position will expire. The shares will go with the puts. These puts will be exercised, which is sell 111 shares at $50 a share. That's it. That's the price we paid for them, 50, as you can see here, and they're taken away with no loss. So leave it alone. It doesn't matter. They will be exercised. Let's move on to Costco. And here these are expiring today at 5.20, and the stock is trading at 4.50, so they would expire worthless. No need to do anything with them. Okay, same thing here, but these are November. See, 23 of them puts, and once again, we can just do the cover call, analyze closing, cover stock like that, and confirm and send. Let me see, make sure that they're worth more than the nominal value. Yeah, we get 15 cents more. Okay, because you could simply exercise, and what are you going to get for it? Well, $30. Okay, yeah, a credit of $30 because you're selling the shares and selling the puts along, and that's $30 a share. And then you would end up with a number of puts here, which will be 23 minus 15. Okay, that's 8. So we could sell those right now. And now we have 15, and those 15 are the 15 here. We have the 30 calls, they're out of the money, and you can keep those until they get a little more money, or you can simply close it at 15 cents. And they're like lottery tickets. There are quite a few of them, so if you close the position, let's say at 20 cents, that will be $560. That's, let's close that. And we'll see if they get filled. If not, I would adjust. Okay, let's move on to Disney. And in the case of Disney, yeah, we have November. That trade is looking good, slightly negative. And we have the shorts expire November the 4th. Okay, so we have time for that. Let me see. Yeah, that's 14 days for that one. So I'm going to leave that alone as my only position. And then GS, Goldman Sachs, 230, yeah, that's worthless as well, and they are expiring today. So we end up with only that Disney position. And as the stock market, I think, is moving up and volatility is declining, then we will be looking for new trades. Okay, market's moving up again. And you can see the volatility is declining, so we need to see it low in the low 20s before we enter new trades. Okay, that's about it for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.